So our next session is going to be on focus and competence. As you all know, and we all watch Shark Tank, we all watch different, we all read newspapers, we all follow news on LinkedIn, Twitter, etc. The investment landscape in India is growing and rapidly changing. VCs, corporate accelerators, family offices, angels, everybody is interested to support entrepreneurs and help new founders scale up their businesses. Now, we all know that there are multiple domains and streams from wherein entrepreneurs are coming today. But success lies in creating a sharp focus and delivering on an ecosystem which nurtures startups. So to understand more on these lines, I would like to invite Mr. Shivam Puri, who is the MD and CEO of Cipla Healthcare. To introduce Shivam sir, he is an alumnus of IIT BHU, post which he's done an MBA from IIM Lucknow, and he's worked in leading FMCG brands like ITC, Unilever, etc. Now he leads Cipla Healthcare as the MD and CEO. Over to you, sir, for the next session.
Usually in most of the events, the introduction is quite flashy. But I really like the way he introduced me with facts. That's a true IIT way of introductions. No flashy, nothing. It's just straight facts. Good. So, can we have the presentation up? So I have 20-25 minutes, and the brief was a little open-ended in terms of how we assess what's my personal look at startups, and as an organization, of course, we have also been doing a lot of strategic investments. So what I'll do is, I thought I'll use my 21-22 years of doing this to actually not, and this is my alma mater calling me in, right? So I thought I'll just use my own personal learnings of having seen lots of businesses and just cull out some of the insights that I believe are overlooked in many cases. And post that we have a question and answer session. I'm happy to get feedback, questions, and counterpoints to discuss. I call myself a BMI specialist, business model innovation specialist, and I'll talk about why I call myself that. I have a passion of turning around businesses. I have a passion of creating new businesses. I love killing businesses, and I've killed a few businesses where the brief was kill it in the right way, so that no one gets to know that you have actually killed something. And and I'll talk about it. That's a very critical part of an entrepreneurship, saying you should know when is the time to stop. Very, very critical, because it's your time at stake. It's your money at stake. Investors are putting in money. You should know when to stop. So it's equally critical. Quickly, who am I? So you know where I'm coming from, and I'll just spend 2 minutes quickly talking about it. Decade and a half with Unilever and ITC. Essentially, I did the role of entrepreneur in Unilever, where I said that let me keep picking up businesses which are struggling and something differentiated has to be done. So I picked up PIWOT, water purifier business, not growing for 4 years. The brief was, how do you grow it? It has not been growing for 4 to 5 years now. And the best brains in the industry were running the business. We got in, within 2 years, it started to grow. I'll talk about how. Jubilant Foodworks. I started running restaurants with Jubilant Foodworks. So the brief with Dunkin' Donuts was, this has been minus 60% EBITDA for 8 years in India. I want you to break it even in 12 months because we have announced it. I hope it's not getting recorded. Is it getting recorded? So I should be careful. Yeah. So the brief was, in 12 months, break it even, and it actually broke even in 9 months. Happy to discuss how. And the last but not the least, actually the most interesting one is Cipla Health, where we have grown top line by 10 times in the last 6 years. 10 times, you heard it right. And the profit has moved from minus 40% to now plus double-digit strong percentage. Amongst the best healthcare profits in the industry. And if you ask me to cull out the learnings from all of them, I've been doing this for 21-22 years. The biggest learning for me is you have to fall in love with your P&L, right? Because P&L has to love you for you to get your funding, for you to be successful. You have to fall in love with your P&L. And for me, I did my MBA from Lucknow, post IIT BHU. And the subject I used to hate the most was finance. For the first time in my life, I was actually worried that yaar, fakka na lag jaye. Actually, genuinely, I was worried for the first time, and thankfully the last time. After I running businesses, I realized that this is one subject you have to absolutely be in love with. And typically, techies and engineers don't love P&Ls. They say, yeah, this is something to be done at the end of the month. You actually have to imagine, dream, live and sleep your P&L. That's when P&L will love you back. And I'll talk a bit about it as we move forward. The other big learning, top line is vanity. So investors will feed you, of course, VC funds coming in. I love VC funds, but they will come in, give you lots of capital. They will say, show us the growth because, of course, within 5 years, 7 years, 10 years, exits have to be made. But remember, that's just vanity. The actual sanity is bottom line. So top line is vanity, bottom line is sanity. But you know what? Cash is reality. Businesses stop. Businesses stop working when they go out of cash. You'll see amazing businesses doing really well on top line, making money, looks good on P&L, and suddenly they die. What happened? They went out of money. There were bad debts. There were lots of overdues that they were just ignoring. They kept piling up. Suddenly, 1 year, they realize, oh, there's no money. Then they run around in the market wanting cash, and that's when investors become a little difficult, saying, no, we're not funding you again. I have lots of investor friends sitting in this room, and I can see the smiles. So, yeah, and that's what investors also love. The new ones who want to join the bandwagon. But the biggest learning is love your P&L. And let's talk a bit more about it with some of the specific ones. And, I thought instead of putting in lots of facts, I'll just talk about a few hard-coded learnings for me. Why have businesses, why do you hear so few stories of business turnarounds? I'm sure you've thought about it. I keep thinking about it all the time. Why are the number of business turnarounds? So a business which was doing well, fell into hard times and could not revive, eventually was sold off at a discount. Why is it so infrequent? Right people building a business, they understand the market, understand the consumer, understand P&L, they build the business into something, it starts to struggle and it dies. Why shouldn't that business turnaround be done? I've been thinking about it. I've seen that within Unilever, I've seen that within the rest of the organizations I've worked with, and I'll talk about my learnings. Why do businesses struggle to scale? So you have your proof of concept, you're getting right rhythm with the consumers and the customers, you get to a 5 crore, 10 crore, 15 crore, 20 crore kind of an ARR, and then suddenly you're not able to scale it up. What happens? You're a smart guy, you got your consumers in, you got the right way to invest money in, and you're of course starting to make a little bit of money, but then somehow you're not able to scale up. What happens there? And why do businesses die without realizing their true potential? I don't want to take names here because again it's getting recorded. You just count the number of amazing business models which started with so much promise, just not happening. Some of them are actually joining some of their competitors as the heads of QCOM, if you know what I'm talking about, right? So it's just fascinating to think about what goes wrong here. And some of my learnings here, I think the biggest issue is that past success for the first few years is your biggest enemy in many ways. Yeah, so past success almost blinds you. Past success almost gets you into a mode saying, now I know why I'm successful, why this is working, and you become blinded to reality. PIWOT, I can talk about it. Water purifier business, doing really well, stopped growing. We went in and, we of course met lots of vendors there. We realized that the gravity device, the smaller device was really successful in the past. It had stopped growing. But the whole effort of the entire team was saying, now let's figure out a way to make it grow. But the reality was the water table had gone down, salt content had gone up, and that device was not able to solve for salt issues. But the past success was telling the people who are running is saying, no, let's dig in further. Let's figure out a way to make more money and advertise more and then consumers will buy more. But that cycle was broken. So very successful businesses actually have this huge issue of saying, we know why we were succeeding in the past and we can't change. So for those of you who are running your businesses, do think about it. Yeah, always question, are you supposed to succeed going forward with what you were succeeding with in the past or not? Second, it's not the TAM. I love these investor pitches and I love these startup conversations where they say, sir, look at our TAM. Such a huge market. My friend, the excitement should be about saying, will you be able to serve your consumer while making money? right? And that should be the excitement. Markets can be created, right? And TAM can be defined, and TAM, as all of us know, can be sliced and diced and converted into whatever is the right TAM for that investor pitch. But actual thing that you need to work on is, are you able to, while making money, satisfy your customer or consumer? If you are, that's what should excite you, not the size of the market. And I love India, of course, but the interesting thing is, in India, we have this issue of looking at penetration rates of everything we do. Right, soaps, detergents, you'll see the biggest of companies saying, "Arey, abhi to kya hua hai? 11% penetration, 12% penetration." So imagine we can go up 5 times, 10 times. I don't get excited by it. My question is, will you be able to make money? And are you making money while serving whoever you are serving? Because otherwise, TAM is a blinding figure. Yeah. Ignoring the adage, what got you here will not take you there. I'm sure many of you have heard about it, but really, really critical in business. And actually, I tell my teams, I say that every 3 years, please quit once in your head. So we love experience. We love experience. So don't get me wrong. We love people who are working for 10 years, 15 years, 20 years, because I believe the first 2 years you're just figuring out and learning yourself. Third year onwards, you start to contribute back. But every third year, quit once for 24 hours and come back and do your role. As a new person coming in, your mind suddenly opens saying, "Arey, ye sab to, there's so many wrong things that this guy was doing before me." I'm sure many of you have experienced it in life. You join a new role and suddenly the world opens up to saying, "Arey, there were so many issues that the guy before me had, and I'm the cool one coming in and solving for it." Right? Why can't you do that to yourself every 3 years in what you're doing? Think about it. It's a very powerful thought. It's not English. Very powerful thought saying every 3 years, can you quit for 24 hours? And think about you as a new person joining in and taking over the role. Will you do things differently, or will you continue doing it the same way? I have experienced, in my personal experience of 20, 22 years, is that every time I do that, there are clear 3 or 4 things that hit me, saying, "Oh, wow, I've been doing it because I'm just getting used to it." Yeah. And of course, very interesting skill set that you need to have is ability to hold different extreme thoughts in your head. I'll repeat that. You actually, to survive and thrive in the future that we're talking about, I was hearing the panelists, and so true. The world is changing so quickly that your point of views need to change very quickly with what is happening externally. And people with extreme point of views, I haven't seen them being successful endlessly. If you want to be successful back to back, learn to hold 2 extreme thoughts in your head. AI will disrupt, AI is useless. These are 2 extreme thoughts. People who believe AI will disrupt and everything will come to an end and all jobs will be lost, one extreme. The other saying, "Arey, we have seen many of these come and go, this is just one of those fads." There are these 2 extreme positions. You have to learn to hold these 2 extreme positions in your head and move between these 2, depending on what you are seeing externally. Very, very important thought. And that's my personal learning. People who are able to hold these extreme thoughts and don't take pole positions, but keep assessing what's happening externally and keep thinking of saying, "So how do I now move better?" actually are successful back to back in different things that they do. Yeah. Yeah, and of course, very importantly, and that's a big, a very sad fact that I hear in many boardrooms and many investors talking about it, saying, "Abhi business has become ये 100 crore का business हो गया है. अभी ना we need a professional CEO. इससे नहीं चल पाएगा." Have you heard that? I'm sure investors have heard that multiple times. It's so sad. The guy who started the business really understands it. He has the passion for it. Why does he need to step away after 100 crore revenue or 200 crore revenue? Because that guy is refusing to develop into what is needed at every stage. Right? So you have to keep developing yourself depending on where you are at that point in time. When you're building a core business, so we built, a 0 to 100 crore business of salons in Unilever. The skill set needed was very, very different. Yeah. And within 2.5 odd years, we realized now we need to change, evolve, and actually say no to lots of things we were doing earlier. And we had to, and that's what large organizations know and understand and do very well. Saying now they need to change. Right? Similarly, when you're running a 1,000 crore business to 2,000 crore business, very different mind, very different thought, very different team structure, etc. is needed. So please learn to evolve so that you continuously thrive. And that's my biggest advice based on my learnings. And I can talk about some of these. For example, Dunkin' Donuts minus 60% to break even in 12 months. Some of you must be thinking, "अरे क्या बोल रहा है यार? ऐसे थोड़ी होता है." There must be something else. Reality is business is common sense. Reality is businesses don't work because people who created them and were successful initially put on the blinkers and start to assume that that's how the world is supposed to be. And then the ego gets involved. And then your personal image gets involved. So if you have to be a true leader in a world like today, you have to be okay standing up and saying, sorry, what we were doing for last 2 years is not making sense. We need to change. It's okay. Because the most important deliverable for you is for the business to succeed, not your ego. Ego kidhar leke jana hai? Right? The business has to work. If business works, you become a successful entrepreneur, leader, investor. So it's okay to stand up and say, no, it's not moving right. And that's what, lots of changes we made to how we were doing things, changed the number of people, etc., conscious of the recording. So I thought it would not get recorded and I'll open my heart out, but I can't. So, so those were some of the learnings that we got. And we have done, for example, in Cipla Health, we have acquired a couple of brands. We have acquired 3 different brands from entrepreneurs. We loved those entrepreneurs. And I again put in some of the things that struck me about these entrepreneurs. When you were looking at picking these guys up, I would have myself met almost, 80 plus businesses over the last 4 odd years to evaluate and figure out which ones of these work for us. And these are some of the thoughts. So for example, feet on the ground, head in the clouds. Very, very critical. So when we meet someone, we need to see head in the clouds. Very important. We don't want the head in the ground. Then it's a useless business to get into. Head has to be in the clouds, but feet have to touch the ground. Because if feet are not touching the ground, there's something wrong. Yeah, and you don't want them in your fold. Things can go off. For example, a big one is people who love their P&L. So for me, one big issue is if I'm speaking with a founder and he says, "Oh, number wagara I'll get my CFO in." He'll tell you how my EBITDA is moving. Yeah, big issue. How are your gross margins moving? Which is your most favorite product? Is it basis gross margin or is this basis some consumer love or some award that you got? I would say gross margin is the real love. Rest of the things are all flings. Yeah. So parts of the business which make money for me, parts of the business that consumers love, if they come together, magic happens. And the founder, for me, needs to understand that. And if he's not understanding it, then there is a slight issue with, for example, many people come and say that scale ke saath sab ho jayega. Sir, abhi, we are 50 crores, but imagine when we become 1,000 crores. Because imagine the TAM. This is India, right? The TAM is so big, right? The TAM never comes. What TAM I haven't seen in 20 years coming. The biggest of brands, we sell a pain care brand, which is a market leader, pain care. My team says, oh, it is not growing, and I actually go back and talk about penetration, so I play the other role. But the reality is that the whole pain care industry put together is just 12% penetration. And it has moved from 9% to 12% in the last 4 years. So if some new startup comes and says pain care solution, look at the market size, because the penetration is only 12, I'll take it to 20. Sorry, it's not happening. My question would be, how would you profitably take it to 20? How would you make money when you do that? Consumers will love your product. And don't get me wrong, I love consumers, right? Consumers are the ones who keep us breathing. But consumers' love has to translate to consumer being willing to pay the money for you to actually, for your business to make sense. Otherwise, that consumer love is useless, right? So you have to seek love which allows you to make money in your P&L. And that's how, if you were to run your business, it cannot fail. Business cannot fail if you're following some of these guardrails. Either you're in a completely off thing and doing you're dreaming things, and of course, QCOM is a great one, latest example. 2 years back, everyone was saying QCOM, no chance. Now everyone is saying QCOM, every chance. 9 people, 10 people are in. And there are more planning, and everyone, actually, we saw a few more retailers now coming in and talking about, we're also getting into QCom. Now everyone is joining the bandwagon, right? So I would say hold the two extreme thoughts. Why would QCom win? Clear thesis, high density, low cost of labor, clear logic. Second, but how many of them would seek it in 10 minutes? And how long can you keep feeding them, right? While burning money. Some of them actually started to make money. So holding these opposing thoughts in a founder, we see as a very critical skill set. We don't like people who are on the other extreme of saying, we believe the world will change tomorrow and I'm the one who will, go and change the world. Sorry, you can be a dreamer and sit at your home and dream. It doesn't work for us. Strong governance, very, very critical one. So, when you're young and brash and you're in your 20s and early 30s, you tend to say, theek hai. It's okay to operate on a certain grade. You know what is great about these large organizations which have survived for 70, 80, 90, 100 years? Very strong governance mechanism. And people who work in these, actually almost, it becomes a part of their nature. And that's what makes them sustainable. Otherwise, count the number of successful startups you have seen over the last 5 to 10 years. Where are they right now? And how many of them you expect would next 20, 30 years? One of the biggest reasons for this going down is actually governance standards. So for all of you who are dreaming, imagining businesses and thinking, saying this little bit of gray is okay, trust me, it is not okay. Even if your investors are okay with it, you should not be okay with it. Because it will give you, trust me, it will give you joy for 6 months, 12 months, 24 months. Come 24 months, things will start to shake. And, we see all the examples around us. We read newspapers, I'm sure, and we see what is happening to many of these guys. And of course, these are pretty much my thoughts. And warning signs. What are some of the things that we say, issue hai? Lack of focus. And don't get me wrong, a startup, and we do it as well. We've done it in our setup as we have delivered this 10x kind of a revenue spike in the last 6 years. You need to try. You can't be, I'm not saying, I'm not one of those traditional guys saying, no, you keep doing one thing, focus. And I'm not saying that. You, of course, have to try. But fail fast, fail cheap. So you have a core on which you are focusing on all the next level things that you're trying. Call them pilots and have a clear thesis saying, I'll fail fast, fail cheap. I'll kill it. I know when to kill it. You can't have 100 things that you're trying your luck on and then go to an investor and say, I have these 100 ways to convert my idea into action. Please give me money. It's a big worry sign. You need to know what is your core every time you go and talk to someone for funding or a conversation. Poor fiscal discipline, as I told you. If the founder is very passionate about the product, loves the consumer, really understands what the consumer needs are, but you ask them saying, how do you make money? They say, we'll get the CFO in. There is an issue. They need to know, you need to know your financials by heart. You need to know your consumer by heart and your financials by heart. You cannot go wrong. Yeah. Unrealistic growth projections, of course, all of us need to be optimistic and excited about the future. But you can't be saying that I'm growing at 20, 30%, but suddenly I'll now move to 60, 80%. Or I'm growing at 80% now and I'll keep growing at 80% for the next 5 years. Some of those things have to add up logically as well. Resistance to feedback. I believe that for people to be successful, they have to be okay with feedback and inputs because you cannot get it right 100% of the times as an individual. So you need an army of people who are actually giving you continuous feedback on saying what can go wrong. Your best friend in the organization should be if you ask me, should actually be the CFO. And a CFO who doesn't worry about his job. So you have to give him the comfort saying, मैं तुझे fire नहीं करूँगा या करूँगी, right? So you be with me and keep telling me what we are doing wrong. They should be your closest friends. And they should be allowed to give you continuous inputs. Hopefully, mostly you will not go wrong if you do that. Weak team dynamics, of course, we all understand that. Governance I spoke about. And over-dependence on trends. These short-term trends that we all get excited by, it's important for us to double-click and triple-click these trends and think about how would they convert or translate over the next 5 to 10 years. Because trends are trends. There's a reason why they're called trends. Right? They don't last. They change. And when they change, what happens to you? So you have to continuously keep thinking about, is my model actually riding the trend, which is good. But is that the core thesis of why I believe I would be successful in the future? And some of the favorite examples, and this is just the last one, but I believe and I'm sure many of you might not agree with me, but the surest and the best way to ensure that you have the highest probability of success is to actually look at remodeling existing businesses. So what I'm saying is, you see a business and you say there's a consumer who is willing to buy, right? And there is a way to make that product. But the way this product is getting connected with the consumer is the problem. I'm not only talking supply chain, there are various ways to do that. But for me, this is the surest way to win. And these are some fantastic examples. Some of them are my competitors, but I still put them up here. Patanjali, fantastic example. Completely rewired and changed the way marketing was being done. I was in Unilever and I was part of that group which was told that you should figure out what to do with these guys because they're suddenly becoming big. One of the inputs that I got from my CEO at that point in time, 10 years back, was, जितना भी marketing अभी तक सीखा है ना, so I said, yes sir, उसको पूरा invert कर दो. Whatever you learned so far on marketing, just turn it upside down and then evaluate what these guys are doing. And actually you have seen Unilever doing a very good job at launching naturals and, competing and pushing back some of these competitors. That's because there was the humility to accept that we don't have all the answers, and maybe whatever we learned for the last 80 years needs to change for a certain set of customers. And that change translated to success. Zerodha, we all know. Nykaa, fantastic one. There's Amazon, there's Flipkart. In comes Zerodha and says, I'll do this vertical once category input. And of course, to a logical mind, we said, this is already there in Amazon, Flipkart. Why would this guy succeed? And of course, these guys have lots of money on their hand. Who would feed and fund Nykaa? But they came in and they said that, this class of customers has a very different need. So let's figure out a way to actually translate that and convert that need better. So give them an option to explore. They like to explore. So give them a complete range, which Amazon, Flipkart is not able to do because they are serving 100 other categories, right? And give them an experience that they love. So same logic. Existing customer, someone has ticked it off saying customer is willing to buy online, and you are actually figuring out a smarter way to translate the need. Apollo Healthcare, urban company, amazing. Of course, they've struggled, but eventually now they are seeing light of the day. And Amul, what a fantastic remodeling. Just think of it. They're completely, it's a very simplistic thing saying, let's use the cooperative model and move the entire supplies. To someone who say, age-old company, they are doing something. But this is business model innovation, right? And for those of you who are trying to do something very disruptive, very differentiated, I have full respect for you, but keep CFO close to you. So your probability of success goes up substantially. So those are some of my thoughts, on what I was asked to speak on, and maybe I can take questions and it'll, a conversation would help bring it out. The brief was a little hazy, so what you heard was rambling of, or a rambling of gist of what I've learned on what can lead to success. And at the end of the day, business is common sense. For anyone who believes that you're making, of course, some businesses are not common sense where you're trying to send man to Mars. Maybe I'll keep some of those out. But otherwise, most of the businesses are pure play common sense. So apply your common sense, and that's the way to win. So any questions, and maybe we can open up for questions.
Thank you very much, sir. We'll have a few quick questions, just two, because we've already exceeded the time.
Hello, sir. I'm Karthik. So we are working in the agri-tech industry, and according to my research about the market, many companies who tried to optimize the supply chain from farmers till consumers, many of them failed. I have been trying to dig down into that reason. Many of funded startups failed. Have you tried on your own level to any time explore these industries, these supply chains? And if yes, what were the lessons you got then? And if no, what are the tips you will give me to, dig down into the market research in a well-laid way? Thank you.
Sure. No, so I'm an FMCG guy. I've run restaurants and I've sold shampoos and detergents and now healthcare products. But eventually the same, if you ask me, a lot of these agri-tech, and I'm not an expert at it, but the business problem or the opportunity again was basis the TAM, saying this is the gap, right? But the excitement around can we actually translate that gap and cover that gap while making money for us was not done by most of the players. That's my limited understanding of that space. So if you were to focus on saying, while yes, bringing method to unorganized ways of working is a thesis, and another example on the FMCG side, there is these distribution companies, right? You have Udan and you have Elastic Run and many of these guys. It's about saying, can we convert unorganized ways of working into organized ways of working using tech, right? The question should be, I would get excited by it if I can do it while making money now. If I can't do it while making money now, I would not bank on scale and tomorrow for me to eventually, for it to make it work. I've seen lots of large setups which have become very large, still having slightly open-ended thoughts on how they would eventually make money there. So that's what I would recommend you focus on in that space. Yeah.
Sure, we can just have one more question.
So according to
Call
you,
income.
like, which is a better business, like a business which is generating 6% margin, or a business which is generating 15% margin? And the other point is, like you mentioned, the turnaround of Dunkin' Donuts. So what suddenly changed in 12 months that made it to break even? Like, what was the main thought behind that?
Sure. The second question I can answer later because slightly sensitive, but the first one I can answer, and beautiful question you have asked. Compliments to you for asking this question. And this is a debate that keeps happening with us as there is this opportunity which will make 6% EBITDA, and there is this opportunity which will make 20% EBITDA. Which is better? Right? I would say you have to be clear about what your eventual objective is. If it is absolute profits, then whichever is where you have a higher right to win is the first thing you would test, right? So a business which is making a segment which is making 6% EBITDA, but you have the competencies in your setup to be able to realize it easier versus a business which is making 18% EBITDA, but you don't have the skill set. I would actually go and then prefer the lower EBITDA part of the business to first get in, because you have a right to win. You have to वो कहते हैं ना अपना you have to understand who you are and what your capabilities are and what your ecosystem is. That realization is very critical. And whatever basis that expertise that you have, whatever you can realize easier is the one that you should get into. Yeah, so I would say no perfect answers there. A finance guy there would actually tell you go after the 18% and leave the 6%. But as a business guy, you have to say which of these I can realize easily. And that is the one you should push towards.
What are your thoughts on working capital? Like 6%, there is no, like not much amount is stuck in the working capital. And in the 18%, lot of cash was stuck in working capital. So like, at the end, should it boil down to the cash, how much cash we are generating, like based on the return on cash?
Absolutely. Honestly, if you ask me, it depends on who you are, right? If you are sitting in a large organization, well funded, थोड़ा सा working capital negative, positive में ज़्यादा चला जाए, it's okay, you can survive. But if you're a startup who is raising money and raising funds repeatedly, I would say cash is very, very critical, right? So you have to go with whichever gives you a comfortable working capital first, versus taking a risk and going after a higher margin business where working capital can become an issue. Right? It's safety first. वो बोलते हैं ना पहले अपना seat belt पहनो and use your mask before you help others. So first you get your business stable, and depends on which stage the business. For very large funded businesses which are happy with the cash, of course they would want to go into a higher percent margin business. Yeah, may I'm happy to discuss and give whatever limited inputs I can give. Any other questions?
No, sir. We would
Super.
like to end here. I would like to really thank you for this insightful session, and I would also like to request Tarun sir to please come on stage and give a token of appreciation for spending your valuable time.
Super. But thank you guys. Best of luck. I truly believe, I truly believe as an Indian, and I get excited when I talk about it, but this is the best time to be in India and doing what we guys are doing. We are the luckiest that India has ever had. So the next 10 years I just truly believe it'll be a disruptive change in the country, and we are the ones who are at the center of it. So I feel incredibly lucky, and I believe all of you are equally lucky. In the next 10 years, a substantial progress would be made by all of us in whatever we are doing. So thank you. Thank you for your time.
Thank you so much, Shivam. I'll tell you, I mean, whatever you said, especially when you said, love thy P&L and P&L will love you. As a CFO, I mean, I've been a CFO for more than 15 years in different companies. So this is music to my ears. A business guy talking about P&L and risk and governance and profitability and all that, it sounds, so now I have to take a contra view. You said that, there are two extremes, right? You need to keep two extremes in your head. So one extreme is P&L. The other extreme is product and consumer. So, I mean, if I were to, put it that way. So what I would only say that, he has really made my job easy. He has really made the jobs of the investors easy by, giving so much of, so much of stuff from his experience and wisdom. So just keep two things in mind and strike a balance. Thank you so much for your insightful talk, Shivam. Yeah, thank you.